Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Friday, 30th of June, last day of the week, last day of the month, and last day of the quarter, in which we had two big pieces of economic data that will impact, I think, the sentiment for today and for the upcoming weeks. Personal income month over month for May came a little bit higher, but spending month over month came 0.1 lower than expected. But the big one was the PCE. After yesterday's, let's review yesterday's GDP growth rate with 2%. Remember that we said that the estimate was 1.3, but the final was 2%, showing signs of a strong economy. We got also a bad piece of news in which PCE prices quarter over quarter final came higher than the previous one. We came from the last quarter of 2022, 3.7. We got 4.1 for the core PCE, the big measure that the Fed are watching. So after that quarter over quarter reading, today all eyes were into the PCE price index for May and year over year. And oh boy, PCE price index for month over month came 0.1% down from the 0.4%, and year over year 3.8% instead of the 4.3% in the previous month. But remember that the core PCE and most importantly the services is what is causing this sticky inflation and is what Fed is more focused on bringing down. So core PCE price index month over month 0.3% aligned with expectations and 0.1% lower, and year over year big surprise 4.6%, way a little bit lower, 0.1 lower than the estimate and also the previous one. Chicago PMI also quite important today, 41, lower than the expected, a little bit higher than the previous one. And another good one, Michigan consumer sentiment final, big increase, consumer expectations, big increase, and the 5-year and the current conditions and inflation expectations from the consumer is way lower, with 3.1 for the 5-year inflation coming down from the 3.1, and the final for June 3.3 down for the 4.2. So all these pieces of information are signaling that consumer spending is strong, economy is strong. The quarter over quarter core PCE from yesterday is a little bit of an issue, but right now the current conditions for month over month and year over year regarding PCE price index, it's starting to cool down again. It's not going down, but it's trying to decrease their acceleration. Also, inflation expectation and consumer sentiment remain strong, and it's quite important to see the consumer sentiment because right now, if we have a strong economy, we need somehow, in order to battle the inflation, we don't want to enter a recession. And the key to avoid the recession is consumer sentiment and consumer spending. At the same time that the Fed is trying to cool down the economy, we don't want to enter a recession, and we need to basically tread waters until the inflation comes down, and then the economy can again push up. So that's the current situation, and this kind of news brought the market up. We are going to see the charts a little bit later, but first let's review the probabilities for the interest rates, because right now nothing changed. For the 26th of July, we still have almost 90% of probabilities for a new hike. This is priced in the market. But the probabilities for the rest of the year and the first month of 2024 is nothing. Same as yesterday. Be careful with this 35% for another hike in November, because we are balancing this 34.7 was 15 last week. And this is the kind of issue that markets are not pricing in. Markets are going against the Fed in terms of one hike instead of the two hike. And basically we are going to remain at these levels until January 2024, and in March we are going to cut rates with 35 probabilities. This is what markets and analysts are expecting. So let's go now to the charts and let's see what basically, what are we seeing in the charts? This is the Nasdaq. Remember that yesterday we talked about this wedge ABCD continuation higher with a higher low and break to the upside towards last week high. This is exactly what happened. And if we check the 1 hour chart, in which we have all these different levels, we have this one and we have this one and we have this one from Thursday, all these were broken. All these were broken, and we are basically towards last week high. In the daily, we can see that better. Last week high, this point, and we are putting a nice strong green candle, and right now we are at the top of the range. This is good news, quite strong. Let's see the reaction since the open. This was all the three levels that were watching pre-market. All these were crashed during the push. This is quite interesting to see this ascending triangle into the open after PCE came out, and then after a little bit of choppy due to Apple pulling back, I think then once we cross the opening range breakout to the upside, the opening print, and we started to creep higher, we, by our first target and my first target towards after the open for this long was this blue dot line, last week high at 15,322. We consolidating up here and we started creeping higher. Now, we are not skyrocketing. We are right now trying to continue the trend after this pullback towards the VWAP and the 200 moving average, but manage your expectation, because if we check, let's see the 5-minute chart, we are 1.70 on the day. Since the opening overnight, we were already quite in the green. So since the opening overnight until the opening pre-market, we were gapping up almost 1%. So basically, since the open, we added new 0.70%. So don't expect the market to just skyrocket 2% when it's already up, gapping up in overnight 1%. That's the kind of thing that I think we have to really understand and experience. So the most experienced traders will tell you that manage your expectations when we are already gapping up this big. We have two options for a gap into the open, either basically gap fill reversal, or what we did today is basically a little bit of pullback and continue higher. So my approach, being Friday, was watching for a pullback towards this pivot watching this pivot into the PCE in pre-market. That didn't happen, so my only approach was to just trade the 1-minute chart momentum opening break and having a tight stop in case it wants to false break and then do the gap reversal. So basically the gap fade, and it was quite good, the trade. Then we looked for last week high, and we are now trying for 15,300, testing again high of days. S&P's is a little bit higher, 4491. I think 4500 would be insane. It's around this level. So 4500 would be insane for today for the S&P's. I think it's quite strong, and given the circumstances with the fundamentals and also being the last day of everything, of the week, of the month, of the quarter, we might see this pivot. We might see this high daily level in the ES continuous chart that in 4493 and 4500. It's a daily level at this. You see this candle? This candle is from April last year. So look at this beautiful pullback on the S&P's gapping up. We didn't have that big of a pullback on the fib retracement. We just pushed again, and well, we got the higher low and we got the continuation higher, and with this movement today fueled by The fundamental data, economic data, it's looking quite nice. So S&P is looking stronger, but Nasdaq is pushing higher. So, but basically today is a nice day for the bulls, a nice end of the week, of the month, of the quarter for a lot of stocks, Tesla included. And I'm not going to perform a detailed analysis on stocks because everything is in the green. We are testing all-time highs in Apple, in Microsoft. But I just wanted to highlight the fact that there are some regional banks that are in the red. And basically, the most important fact that in order to convince to you, to show you, are we in a bullish market again? Can we really trust this price action? Because I was hesitant during the past weeks to really trust the upside due to fundamental analysis. But at the end of the day, the technical and the price action is the king. You have to follow the price action. But one small piece of advice in order to trust this movement to the upside is basically to analyze the last day on the sector funds performance. Because you know that there are some defensive sectors and there are some risk on sectors. So where we are right now in terms of performance in those, you can see this is the 5-day chart. Look at below, look at down here. We have XLV, healthcare, XLP staples, and XLU utilities. All three at the bottom of the barrel in the 5-day performance chart. So there's no defensive rotations, and we are seeing technology with a nice boost, 3%. We are seeing financials already there at 3%, consumer discretionary, communications, and also quite good real estate up here. The only thing concerning is that energy is pushing 5%, but the rest of the profile in terms of sector funds performance, it's already risk on. So if we go back to the chart, we can see that XLE, let's check XLE daily chart. XLE is having a nice run in the 5 days, but look at where we are. We are basically down here. We are not pushing higher. So there's no fear of energy causing again a spike on inflation. This is just a big run from the bottom of the range, but nothing else. On the other hand, you can see XLK that is pushing higher, consumer discretionary, and financials are again gapping up and trying to move higher. You want financials to really push these levels towards 35, 36 that were before the SBB and all the regional banks failing and entering bankrupt. So apart from that, I think the risk on profile is quite clear. We have also the Russell putting the higher low, leaving behind this pullback and pushing this pivot at 190, 189. So this is risk on clearly. And the only thing that you might consider also risk on is Bitcoin, but Bitcoin has their own catalyst and their own thing. Look at this. This is the sell-off because basically the SEC said that the spot Bitcoin ETF filings that BlackRock, Fidelity, and all those brokers submitted to the SEC, those filings are inadequate. So Wall Street Journal said that, citing some other sources, but basically Bitcoin got weakened due to that. Look at this push down. There's for sure a lot of some people are buying this dip, but the reason behind the previous move, these moves, was exactly these filings for the spot Bitcoin ETF from BlackRock, Fidelity, and all those. So now SEC is saying that those are inadequate. So are we legit holding these levels? That's a question for you. But for the rest of the regular stock market, the regular commodities, consumer discretionary, and all those indices, leaving behind the Bitcoin and the crypto world, the rest of the market is really, really on the technical side, it's really risk on. So if you have doubts trusting this move, I think we can really start to think about that maybe we need to take a little bit step back and think about healthy pullbacks. But if we pull back more than expected, it's not the end of the world, because I think, in my opinion, I don't think we are going to see any big lows like we did in October last year. And I don't want either to just skyrocket like we did, but you can really think about buying weakness on pullbacks. And that's the change on sentiment that I would like for all investors and all the big money players that are on the sidelines to really trust. And I think that's quite good to feel for the next quarter. For the summer, we need to really see continuation and to start thinking about in a more positive, optimistic way. Because I think we had some bad news, but overall, consumers are strong. Inflation is more or less trying to decelerate. Fed are doing their best, and dollar is really feeling the pressure. So there are confluence and convergences in these markets that show that maybe we don't need to go that higher to fight inflation, because we are starting to see signals and see data that is supporting strong economy and at the same time inflation decelerating. So these are good news, folks. I think we have to really start to think about that this market is stronger than we initially thought, and that most probably we might see continuation, and also pullbacks will be made by new money entering the market. So that's the kind of sentiment I would like to transmit, to transfer for you and share with you. And just enjoy the weekend, enjoy the Independence Day, and remember that next week is going to be quite tricky, because we already had an amazing week this week with big news. Starting a quarter and with a short week is quite challenging, because basically you are dealing with a big hype, and then suddenly we stop on liquidity and on volume due to the holidays. So take it easy, but have it on the back of your mind that this move higher is really supported by some fundamentals, and I think we can start to trust these kind of moves. And that's all from my side. As always, if you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day. Market forecast, market updates, and market recaps. I appreciate your time as always. I hope you had an amazing trading day, an amazing week. I hope your month was great. My month was awesome. And I think price action today was quite legit. It's a little bit tricky when we already are 1% in the overnight, but I think for sure if we check the 5-minute chart, look at these moves. This move on Tuesday last week, and also the sell-off, those were quite trending days. And after the 2 choppy days on the Nasdaq that the S&Ps were grinding higher, we finally had a good day to really enjoy the trend. And because I like trading the trend, I'm a trend guy, and whenever we have clear price action in which pullbacks are met in both directions, sometimes I just want a trend lower. I don't want to trade choppy price action. I don't think anyone wants that, and either range days are not my best. So it's good to see a trending day based on fundamentals, in which I think positive news are starting to appear, and maybe the sentiment overall is slowly changing. So congratulations, have a nice weekend, have a nice Independence Day, and see you next week. Stay safe, everyone.